Hello, welcome back to the lecture on value-added tax. Today there is a very small chapter. It's just a few remarks on the tax rate. As you see from the overview, the information which you get here is rather a general one. So there will be no complicated questions to decide in real life later when you have to solve cases. Well, let's begin with some introductory remarks on the European framework for tax rates. The EU Value-Added Tax Directive says that every member state has to apply one standard rate and that they are allowed to have one or two deviating reduced rates for some products. They are allowed means they don't have to. For example, Denmark has 25% standard rate for everything. So you are not forced to apply reduced rates. You can, but you don't have to. Some additional reduced rates are sometimes tolerated for a transitional period because there were very often member states who applied more reduced rates or specific reduced rates on very specific products. And so when one agreed on the general regime or rules for VAT, these states negotiated a kind of a transitional scheme that they can keep their specific rates for these few specific products until later a certain uniform rule can be established. So the two first lines, one standard rate and one or two reduced rates, that's the regular solution, and the one or other deviation might still exist. But very important is that a reduced rate is only allowed to be applied for those goods and services which are explicitly listed in the EU directive in a certain annex or in the directive itself. The reason for that is one wants to limit the chaos in the EU. Now, the European rules also say that the member states have to apply certain minimum tax rates. So the standard rate may not be lower than 15%, and a reduced rate may not be lower than 5%. Again, apart from cases where explicit deviations are allowed by the EU directive for the one or other country, which is allowed to go on with some old-fashioned rule. Well, the reason why one has set minimum rates is simple. Between the EU member states, we have no border controls anymore. So some goods are able to be transported across the border without being taxed in the country of destination. So they just enter the territory of a state taxed at the level of their state of origin. And now you can imagine if in the extreme case the state of origin practices a zero rate and the state where the goods are transported to applies a 25 or 27% rate. In that case, you would have an enormous distortion of competition. Now, if you set a minimum rate, that spread between the two rates cannot become too high. If every member state has to apply a standard rate of 15%, and let's say Denmark has 25, then if a Danish person buys something in Germany and carries it home, well, then the distortion of the market is still there, but it cannot become really overwhelming because there is at least a bit of taxation. That is the reason why a minimum tax rate is set, in order to limit the difference between the potential difference between the rates. Now the question is, why only a minimum rate and not a target rate, or Why not an upper level for the rate? Well, the idea was we only need to set a minimum rate, because if a state deviates so much or too much from the minimum rate, every additional percentage point leads to a stronger distortion of competition to the disadvantage of one's own economy. So setting only a minimum tax rate also enforces some budget discipline on those high tax member states. They cannot increase their rates higher and higher without having to fear consequences. And so one regarded the setting of an upper limit for the tax rate as relatively superfluous. For example, if you were really willing to introduce a 40% tax rate, then distortions in the market to the disadvantage of your economy would very quickly teach you that this is not a good idea. So one said that could be regarded as superfluous because economy or economic constraints then automatically restrict your abilities to go too high. Well, then the fact that reduced rates are only allowed for a close catalog of items listed in the annex or explicitly in the VAT directives text that also has a same or similar background. Because imagine you had a competition between a reduced rate in one state, or you have a certain item, it's everywhere taxed at the standard rate, and now another member state introduces a reduced rate. Then suddenly the difference between the rates of the other states and the rate in this state could become enormous and could have strong distortive effects. And so the idea is, okay, we just say reduced rates are in principle not a good thing. We limit them to the catalog of things for which we agreed that a reduced rate should be possible. There, every member state has the possibility and the right to apply a reduced rate. But what we can avoid now is a kind of competition that suddenly, to the surprise of other member states, somebody introduces a reduced rate for something where no one else ever thought of a reduced rate, and that suddenly now all the others have the fiscal damage that they also have to react with a reduced rate, or that all the others have the problem that competition becomes distorted, stronger than foreseen. So the idea is also the minimum tax rates for reduced rates and the limited catalog for reduced rate items that automatically limits the distortive effects of different rates in the market. It hinders them from becoming too high. The minimum tax rate in the EU is 15%. In former times, the Council of Ministers could only reach an agreement to extend that for 2 years. That was really laughable because if the minimum tax rate expires after 2 years, then it would have been prolonged for another 2 years by a unanimous vote of all the fiscal ministers. And that effectively meant that the minimum tax rate had no binding effect. Because imagine in this year, our ministry had come to the idea we lower the tax rate to 10%. Then that would need some preparation. That would need 1.5 or 2 years. And so we would just refuse to accept the prolongation of the minimum rate for the next period of 2 years. And so the whole thing would have never any effect. It would never hinder us from going down. That was a compromise which was always demanded by the British. They wanted to avoid an effective legislation on tax rates. The others all wanted it, and so the compromise is we set a minimum rate for the next 2 years. That made a nice impression and was not really binding. Now, after the British have gone, all the others have immediately agreed on setting the standard rate as a minimum of 15% without a time limit now. And that means if now a member state wants to violate the 15% and go down to 14%, then they would need the unanimous consent of all the other member states, because then one would have to change the directive again and lower the minimum rate or abolish it, and that will probably not be achievable. So now the minimum rate has become really an effective binding provision. Good. The reduced rate, there the directive of the EU says the minimum rate has at least to be 5%, and an additional condition is made. The reduced rate shall be set at a level which usually avoids that the enterprises which are taxed at the reduced rate get a cash refund when they claim the input tax refund or deduction. What the EU wants to avoid here is that there are whole sectors of economy where the VAT tax declaration always ends up with a cash outflow for the fiscal authorities. So the idea is one should determine the minimum tax rate or the reduced rate for a sector in a way that there is either usually a zero assessment or a small tax burden to be paid by the entrepreneurs in this sector of the economy. Then further rules. There must be no different tax rate for identical goods in the same state. So you have to stick to the principle of neutrality for competition even if you apply reduced rates. If you apply a reduced rate, you have to apply it to all the entrepreneurs which sell this good or provide this kind of service. Then different tax rates must apply for all firms of value-added tax alike. So to a delivery, to an importation tax on the same good, or to the so-called intra-community acquisition of a good. So all the technical forms of levying VAT on the same goods must entail or must lead to the same rate, because otherwise you would have no neutrality of taxation there. It might be that the tax rate is changed by a state, because under the VAT directive the states are free to choose their tax rates as long as they don't violate the minimum rules. And so when a tax rate change happens, the question is which version of the law will then count? And the answer is the tax rate is always the one which is valid at the moment when the delivery or service is made. You can find that in Article 93 or 95. So in case of a change of the tax rate, you have to look to the moment when the tax arises, so when it comes into being. When the delivery is made, that may lead to interesting effects. For example, if you want to buy a house and you make prepayments in a time when the tax rate is still 16%, and all the prepayments will be taxed with 16%. But now when the house is finished, then the whole production of the house or sales price of the house becomes definitive, and only then the production of the house is finished, and so the complete taxation, the complete price for the house is then taxed under the new rate, let's say 19%. And the only thing where the prepayments are good for is they are credited to the final payment which is due, so that you have to pay the remaining difference between the final VAT amount and the prepaid amounts, and that can have strong economic consequences. So to sum up, What we know is every member state has a standard rate or general rate, which is always applied if there is no exception. Then member states can introduce reduced rates. They have a free choice where they do that, but if they want to do it, they can only apply it to items which are on a closed list in an appendix to the directive. So if, for example, a reduced rate is allowed for flowers, you don't need to apply it to flowers, but you can apply it to flowers. You cannot extend the reduced rate to other things which are not on the list. And the minimum rates 15% and 5%. At the moment, the minimum rates, by the way, does not really have a big effect because at the moment the lowest rate which any member state takes is 17%. This is, by the way, now spoken in 2021. In Germany, the standard rate is 19%. You find that in paragraph 12, section 1 USDG. And the reduced rate is 7%, which you find in 12.2. So these are the references which you have to use in order to give reasons for the tax rate which you use for calculation. Historically, the rates have always been increased. It began with 10% standard rate in 1968 and went up now to 19% since 2007. There has been some years ago a discussion if an increase in the rate was necessary, and at that time political parties, most of them, had already agreed to say to the press that an increase to the rate of 25 was unnecessary and could not get consent. So they were already agreeing that everything below 25% was not possible and that we needed a far higher rate. But then later that increase, which evidently was already planned up to the details, was not really made, so we still have at the moment 19%, but we can probably conclude from that public discussion that if the next increase is going to come, it will not be 20%, it will be probably far higher. Historically, the reduced rate was for a long time half the rate of the regular rate, but now the reduced rate is usually applied to products of everyday life, the things which also the poor need. And so the idea was, if we tax things with a reduced rate which are not luxury but are needed for survival, then one should not hit the poor by further increases in the reduced rate. And so the reduced rate was frozen at 7% in 1992, and then that rate was always kept at that level later. Probably that policy is going to be followed in the future too. Yeah. Now, if the rate is changed, I already mentioned that, which rate will be applied, that will depend on at which moment the service or product was or delivery was made, and that is determined under paragraph 27.1 USDG. So if a delivery was promised in February 2020, but it was then made in July 2020, when the rate was lowered to 16% temporarily, the rate counts, which is valid at the moment when the delivery is made. So that would be 16%. If you have a change in the tax rate, that also brings along a problem with regard to civil law and contracts, because the customer usually has no business with how high value-added tax is, or if value-added tax is 16, 19, or 7%, or if the business owner has made a calculation mistake. All that doesn't matter. The only thing which matters in a contract is the price to which you have agreed. The price is that what you have to pay. Now it may happen, and that's binding, and the motives behind the calculation of the price, which the entrepreneur had somewhere in the back of his mind, these do all not count. So imagine a GmbH has made a contract which obliges it to sell you a service for a monthly fee of 1,190. And they signed that contract or made the calculation at a time when the tax rate is 19%. Now, surprise, due to a change in value-added tax legislation, the tax rate shall be increased to 25%. Well, that's rather a hit. Now the binding contract says a GmbH has to deliver or has to render the services for 1,190 because that's the price and that was the agreement and that's binding. Now, naturally, that's strongly unfair to a GmbH because they assumed different conditions when they formed or entered into the contract. Perhaps they signed the contract 30 years ago or so, but it's still binding and now they need to change it. In that case, or for such cases, the German USTG also contains a rule on civil law. It says if the law is changed, then an entrepreneur can demand that from its customer that the customer agrees to an adequate change in the price, an adequate compensation of the contract conditions in order to compensate for that unforeseen change in the rate. Here, for example, it would allow to change the price from 1,190 to 1,250 as an adequate compensation for the change in the VAT law. That's interesting because that's the only thing which you can do in order to make to prevent that entrepreneurs are surprised and ruined by changes in the VAT rates. The law says you have a right to an adequate compensation if the tax rate changes, either the entrepreneur or, and also is possible, the customer. For example, if the VAT rate is suddenly changed to 5% or so, then the customer could demand an adequate compensation for the fact that now the entrepreneur has no longer to pay 190 euro, so could try to argue I deserve a decrease in the price. Well, but I recommend you also to think about a variant. Imagine that a GmbH concludes a contract with customer B on the 30th of June in the year 01. At that time, the rate is still 19%, but on the 1st of July, so on the next day, the rate will increase to 25%, and that has already been known for 3 months. In that case, to demand an adjustment of the contract terms will be difficult to justify, because here a GmbH should have already known that all along, that the rates would rise and that the promised service would not be able to be delivered at the old rate. And probably here a court would decide that under the legal rules of 29.2 USDG, a GmbH has the right to an adequate compensation for the change, but that the adequate compensation for something which one could entirely foresee at the moment when the contract was made, that here the adequate compensation is zero, because there was no damaging effect of the tax rate change, and probably the customer could rely on the assumption that if the tax increase was already known, it should have been taken into account when the calculation of the price was made. Well, But keep in mind, a tax rate change entitles to a change of certain civil law agreements under certain circumstances, at least. Not always, but you are not helpless if a tax rate change happens. You are not bound by contracts which have been made a long time ago, so that your whole calculation is ruined and you can pass it on in an adequate way. The tax rates in other EU countries range from 17% in Luxembourg to 27% in Hungary. I give you here a link where you can see how the VAT rates in other countries are. You can also find that if you do research by Google or another search engine and then just type in VAT rates 2021 or so, then you usually get some internet sites where you can find lists of the rates in different countries, and I would recommend to take the official publication of the European Union, because there you have something firsthand where you can hold an official institution responsible for. Yeah, the German reduced rate is 7%. I told you so. That is 12.2 USDG. The rules for the reduced rate are an exception from a general rule, so they are to be applied in a narrow sense. So if the rules do not explicitly allow 7%, you cannot extend the rate to something similar. That is the explanation why the delivery of a hamburger is 7%, whereas a restaurant visit, where you sit down and you order a hamburger from the waiter, is no longer a delivery of a hamburger, but something else, and that something else, namely restaurant visit, is not on the list of the reduced rate events. Here I have made a small overview which reduced rates exist. First, the delivery of goods which are named in a long supplement or annex to the USDG. Number 2, letting the same items for rent. Number 3, such strange things as raising of cattle or some things. Deliveries of services as a dental technician. So if you go to the dentist will be tax-free because that's human health treatment. But the dental technician who prepares your new teeth, that's not health treatment directly, so that's taxable. No human health treatment by a doctor, but somebody who works and does preparatory work for the doctor, and so that's taxable, liable to tax, but taxed as a reduced rate. And then you have such nice things like the entrance fees for theater visits, concerts, museums, the transfer of rights which result from the copyright law but not from the Patent Right Act, the transportation of persons by railway or with buses, and then the transport with buses or taxis is only taxed in a reduced way if it's not a long distance transport but within the own municipality or not more than 50 kilometers of distance. By the way, that restriction is specifically a German one. For example, the transportation by railway was in former times also limited to 7% only for short distance travel. That has been abolished 1 or 2 years ago and has been extended to every transportation of persons by railway, just to facilitate the usage of public transport and to give an incentive to refrain from using one's own car for long distance travels. Letting rooms for habitation for guests for short time. So hotel business has been subjected to the reduced rate in Germany some years ago, 7%. That was already for a longer time allowed by the EU, but we only made use of it some years ago. In order to minimize distortions in the market for breakfast, nevertheless, there was a special rule which said that part of the overnight stay price which you pay for the breakfast will be taxed under the regular rate. Yeah, and then the art of reading Annex or Supplement 2 is really interesting, because here you have a long list of things which can be sold at a reduced rate. And for example, milk and dairy, I believe it's dairy products. So products made from milk, some other things, natural honey, and so. And now you need to know exactly what is milk and what is not milk. So the problem is something which also is known to the customs authorities. And so people working for the customs authorities always know what specifically is meant by a certain name of a product and what only resembles that product. And so for all the definitions, what counts as milk or dairy product or something like that, the USTG then makes a reference to the customs tariff code, because there everything is explicitly explained in a way that officials can determine, is that still milk or not. Flowers, vegetables, but namely, so if they say namely, that means only the ones which we now name. So if you sell vegetables which are not named under one of the letters in the following list, standard rate. Namely means only those which I name now. Potatoes, tomatoes. So when you hear some tomatoes or potatoes in the case, you should immediately get a shock and say this is a 7% thing. Salad, 7%, something which I always forget. Carrots, cucumbers and cornichons, 7%. Fruits fit for human consumption, and nuts. So if you ever have the idea, if you read that list, you go nuts, then you go 7%. Coffee, tea, mate, and spices. Coffee and tea are only 7% if it's coffee powder or if it's tea in powder form or not prepared for immediate consumption. So not the hot drink is 7%, that's 19%. The coffee powder or the tea in form of leaflets or small little bags or so, which you still have to prepare by pouring water over it, that is the 7% product. The other one is also already the luxury variant, and that is 19%. Cereals, flesh and fish prepared for human consumption, so as part of a meal. So the flesh in the hamburger, 7%. Sugar, products made from sugar, 7%. Cacao and chocolate, and products containing cacao and chocolate, probably in a material extent naturally. Bakery products. There was in the German original text, there was a lengthy description of where these products are made from, and then in the end they say products of a bakery, and I regarded that as something which sums it up very good, everything in that category. So selling bread is 7%. Water, but again in the poor people's version, so not if it's packed in bottles or other Tetra Paks or other packages which are meant to be sold to the consumers in that form, because that's already an unnecessary luxurious variant. Water, what they mean, what you really need for survival is the water which comes from the crane in the wall and is delivered by your public institution which delivers water, or by the other institution, whatever, which takes care of providing you with water. Water in the form of hot steam is also not taxable with 7%, but with the regular rate. Famous is the rule that drinks, which consist of 75% milk or more, are also privileged by a 7% rate. That was probably developed some decades ago when the EU produced far too much milk that they wanted to give an incentive to get rid of the milk. And naturally also milk is something which is regarded as healthy and good nutritious food. So they wanted to give an incentive to buy it. And not every grown-up is a fan of milk. So they allowed to mix milk with something else if that something else was not more than 25% in total. Wood, namely firewood, so for heating purposes, or some other variants which also usually are used for heating. Books, you see here, firewood and books. So that is a kind of a very high degree of contempt for books, for certain books at least, to list the two items directly as neighbor to each other. Books, newspapers, and other printed products, with the exception of advertising catalogs or so, and also of material which is regarded as danger to the mental health of young people, so pornographic material. Namely, again, so not every book, but only things which are in the list here are protected and can be sold under the 7% rule. As you see here, ebooks are not covered by that because from the context it becomes clear that a book is something which is a printed matter and an ebook is not. So at a later point of time, one created an additional entry with the permission of the EU that also ebooks could be treated under a 7% rule. Wheelchairs and other means of transportation for disabled persons. Here you see again that the 7% rate is very often applied for things which cover the basic needs of life, so which cannot be regarded as luxury demand, but as basic needs which you need to survive. And so for disabled persons, a wheelchair may be absolutely necessary, and that is why that is here on the list. Some other items are placed on the list because one wants to support cultural activities. That is why certain theater events are on the list, or why books are on the list, or 53 pieces of art, or collector's items, and sometimes some health products also come to be on the list. Whenever the list is enlarged, you either chose something from the catalog in Annex 3 of the VAT Directive, or a new thing has been put on the annex by the EU, and you take over that. Yeah. So I mentioned already the curiosity that Germany applies for the overnight stay in a hotel 7% rate, but not to the amount of the payment which is paid for the breakfast. So that even if it is a uniform or a single transaction, which cannot be split up into two parts. Here the law requires to split it up artificially into two parts. That goes back to a strange jurisdiction from the European Court of Justice, which said that could be possible if it's necessary to avoid distortions of competition. And we in Germany have taken that over only once. In all other cases, apart from the overnight stay in a hotel, in all other cases, when you have one transaction, the whole transaction is always taxed under one and the same rate. So this is rather strange. So whenever you go to a hotel in Germany and you get an invoice where then in the end a certain percentage of your overnight stay is taxed with 19% and the rest is with 7%, then you should know this is a really, really miraculous and singular event which you then live through, because which you then experience, because that's the only case in German VAT law that one single transaction is taxed under two different rates. Good. That shall be enough for this time. The next chapter which has to come is the chapter on all those little small formalities at the end: taxpayer, tax riser, invoicing, declaration duties. So all the little formal stuff at the end will form the object of the next chapter or chapters. And yeah, and we are coming near to the end of the first part of that whole lecture. Then you have your first overview of everything which goes on in the field of VAT, and then we have to train that a bit. Okay, thanks very much for watching. Hope to see you back soon. Enjoy the time till then, and oh, thanks for watching. Till later. Ciao.